Okay. Well, good afternoon, everyone, and welcome and thank you for joining us for today's webinar, Faster Decisions, Smarter Funding, hosted by Accelitas and Loan Payment Pro. I will be your host, Trish Ward, Vice President of Lender and Client Relations at Loan Payment Pro. And I'm delighted to see so many familiar names popping up on my screen as joining in. I look forward to seeing you all in person at some of the upcoming conferences this year, especially Lend It in a couple weeks. More about that later. This webinar will be recorded and will be shared with all of you after the presentation. And I encourage you to use that chat function on your screen if you have any questions or you want to share a joke during the webinar. We want this to be interactive, so please share your comments and questions. And in the spirit of that idea, we'll be launching a poll question shortly. So be sure to answer that when it pops up on your screen, because we definitely will want your input. So today we will be focusing on the trends in our marketplace, as well as some of the key challenges that we're navigating today. And that's for vendors and lenders. And also 3 key actions that we can do for success. Just bear with me as my slides are a little slow. So today it's my pleasure to introduce our presenters. Both have proven their dedication as leaders in our industry, as advocates of our lenders in reducing fraud and protecting consumers' data. So to start, Greg Cote, he's the CEO of Accelitas. Mr. Cote leads Accelitas' business strategy and data daily operations. Before co-founding Accelitas in 2004, he's a portfolio manager for J&W Seligman and Company, is that right, Greg?
Seligman.
Seligman. A New York,
Close enough.
knowing me, right? A New York-based investment management firm managing 40 billion in assets. Mr. Cote was part of the technology team, which managed $18 billion in technology-focused mutual funds. And he led the team coordinating technology investments across all of the portfolios and chaired an investment committee managing a $2 billion portfolio. Wow, I'm already sweating.
Yeah, don't even give me an intro after that.
Whoa. And before that, he spent 14 years in banking. But what I really want you guys to focus on is his proven commitment to help lenders utilize alternative data to bring consumers the access of credit that they need. James Celli, on the other side there, he's the founder of CEO of Loan Payment Pro. He successfully grew Loan Payment Pro, or LPP, you know me, from a startup, from a startup to an industry-leading solution with over $1 billion in annual processed volume and 250 merchant clients.
Which is amazing.
James is a proven business leader and serial entrepreneur, successfully building and selling multiple technology companies. Prior to Loan Payment Pro, James founded and built a powerful SaaS based marketing platform, which is successfully sold in 2014. He has over 20 years of experience in financial services, online marketing, customer acquisition, and he is dedicated to providing the only compliant and most cost-effective acceptance platform for lenders. So that's a mouthful. But thank you guys for agreeing to share your insights this afternoon.
Well, what about you, Trish? For those that don't know you, you've been in this industry for a long time, and I tell you what, you get a better warm welcome than either Greg or myself whenever we go to a conference or anything. So you've got a long time background in the industry.
Right? Yeah, I mean, my background, here in the Washington, D.C. area, was about 15 to 18 years of experience at different lobbying or legislative affairs shops and associations. And I moved into this industry like we all do running into the industry because we're so excited with the Online Lenders Alliance. And then I shifted into lead gen and grew my experience even more with Epic Loan Systems and LMS in our space, and was lucky enough to find my spot at Loan Payment Pro.
So you've got the background from the lobbying and the governmental relations aspect, lead generation, loan management system, right? The operational hub of a lender's environment, and now payments. So what else is there besides being a lender yourself?
No, just to make sure that everybody attends Lend It and stops by both of our booths, right?
Which are located right next to each other.
Right. So we'll have more information about that later, but definitely, I think there's a lot of people on this call that are dedicated to bringing value and efficiencies, and more importantly, the access to credit to the lenders that they can't get anywhere else except with us. So that's why we're all here, right?
Yeah.
So let's move to the next slide. James, to get us started, if you can give us a quick snapshot of Loan Payment Pro and how LPP helps lenders fund consumers fast, efficiently, and most cost-effective way.
Yeah, sure, Trish. Thank you for the intros. And before I give a couple-minute overview about Loan Payment Pro, otherwise known as LPP, we're just really excited about the partnership that we have with Accelitas. Greg and Jimmy Williams and the team over at Accelitas do a great job with the product and the technology that they have. And we've come across many verification, validation, and alternative data companies before, and none of them can compare to Accelitas. And we have carefully chosen to go all in with them and fully integrate the bank account validation and verification technology that they have, which we'll get into as we move along. But I think this is a marriage that was meant to be because it brings more benefit and brings greater advantage to the end user for the lenders and the borrowers. And we're going to talk about that a little bit today. But with that said, Loan Payment Pro is a leading compliance adherence-driven payment processor for the consumer finance space, specializing in small dollar, high interest type of lending and loan products. We've built the infrastructure and technology along with the bank relationships that are needed to provide longevity, not just foundational support for providing payments to these types of lenders in our industry, in our vertical, but really the technology so that we can provide functionality to create more efficiency and effectiveness. And the four main products that we offer lenders are debit card acceptance, Visa, MasterCard, and now Discover. Push to card instant funding, which is real-time debit card disbursement, which we're going to go into detail today and how that works hand in hand with the Accelitas platform and solution. We also offer ACH for both credit and debiting. And then we also have a proprietary debit card instrument validation and verification solution, as well as bank account validation and verification solutions now made possible with Accelitas. So at a high level, we're providing the functionality that's needed for the most frictionless, cost-effective, and efficient solution between a lender and a borrower, so a lender can take payments. And the whole idea here is to take them in a compliant fashion, to take them at a low cost, to take them in a way that is most user-friendly for your borrower and consumer audience, and to do it not just compliant, but to be effective at it, right? Lower first payment default rates and decrease missed payments and increase payment success. And that's really our motto here at Loan Payment Pro. We're trying to innovate and strive for creating new solutions and innovate technology that allows the lender to operate more efficiently.
Great. All right, Greg, you're in the hot seat.
On the hot seat.
Share with us what Accelitas is doing to help grow and be more efficient.
Yeah, and I will say I'm as equally as excited about the partnership. And I will say one thing, I mean, I've seen and invested in a lot of technology companies over the years, both public and private. And the one thing that I've noticed about James and the team is that they continue to innovate, like they continue to push the boundaries. They've got deep relationships with, pretty serious people in the industry. From an infrastructure standpoint, they get access to things that other people just don't seem to get access to. So if you're on the Loan Payment Pro platform, you're in a pretty good spot. So nice job. So Excelitas, we started out in the identity space. We then moved into the credit space because we learned that you could actually predict credit outcomes with identity data, and you could do the exact same thing the other way around. You can predict identity outcomes with credit data, and that led to AI Lift, which is our credit score that we sell into the industry. AI Lift essentially extends FICO and other scores into thin file, no file. So there are a group of consumers inside the FICO range that we identify that don't have good FICO scores. And there are consumers all the way to the bottom of the credit spectrum that we have data on. So there's about 2% of the United States that we haven't been able to score. On the Validate Bank Account, which is our newest product, which is the one that LPP is integrating in, this is a non-credentialed bank account validation product that takes the bank account and routing number as the inputs, and that's it. You get a response back in generally 200 milliseconds or less, and that's all you need to do. You don't need to ask a consumer for their online credentials. You don't need to go to a hard bank consortium to sometimes get the data from. We've tried to make it really easy. At its core, Excelitas is a data analytics company steeped in supervised machine learning. So we use very sophisticated, nonlinear, but explainable models to do what we do.
Great. Well, thanks, guys. I think, not to be a Debbie Downer, but I want to pose a polling question to you guys. On your screen, you should see the poll is in progress. So what I want you guys to do is choose between these 5 questions, and we'll see on the screen which category maybe is more of a challenge for your company, because this will help prompt. This will be like a segue into our next section during the webinar. So it looks like we're starting to get some percentages in. Greg and James, can you see that on the screen?
We do.
I only see the polling question.
Okay, it looks to me like 53% are seeing one of their biggest challenges is finding growth. And it looks like between regulatory compliance, surprise, surprise, right, and tightening credit market are kind of even at 22%. And we have 4% increasing competition. So that is telling right there of, what are some of the anecdotal, obstacles that, people in our industry are facing. So Greg and James, as we see that come through, it looks like now finding growth is like now at 52%. We all know each lender has its own KPIs. It's important for each lender to do that. There are key performing indicators, and every lender uses different variables to assess their data. Of course, we all are working towards higher conversions, lower defaults, reducing fraud, while protecting consumers' data. And considering all these challenges, can you guys walk us through, based on like what we've been seeing with the polling data, can you guys help us walk through some of the challenges that we want to address?
So Trish, we still only see the poll, but what are the results telling you?
The results right now, I thought you'd be able to see it, so I apologize, because it'd be interesting if everybody could see it. But right now it looks like 50% finding growth, 25% regulatory complaints, 0 consumer privacy, because everybody knows we're protecting it, right? 4% increasing competition is a threat, and 21% see tightening credit market as a challenge. So the
Right.
biggest one I see is, finding growth is one.
Well, I think if you think about the backdrop here, right, we went through a pandemic that stopped the world for a moment, right? And then we saw the US government throw in, an unbelievable amount of liquidity at a market. That allowed people to gather a bunch of cash, right? And then pay down credit. And then all of a sudden the world opened up, which is what we experienced last year. So you've got a lot of growth, and then it starts to taper off because of inflation. And so finding growth is going to be, increasingly harder to get at, because the money's going to start drying up as the Federal Reserve starts pulling it back out of the economy to tame inflation. And so on the margin, the question is going to be, what do consumers do? And do they keep spending? So they spent at a rate of 3.7% in the first quarter of 2022. The economy as a whole came down because we dug into inventory and we had some export issues, but the consumers were there, and they've spent at a rate that is probably not sustainable. And so I think that's the challenge, that we're kind of at this flux point in the economy where there are a couple of headwinds coming at us that James and I are going to talk about in a little bit.
Okay. James, do you want to add anything to that?
Yeah, and Trish, you mentioned KPIs, right? When I think KPI from a payment processor standpoint, that's all we look at. But we look at it from a different perspective. And the conversations that we have with many of our large lenders, almost on a weekly, if not daily basis with some, is you have to be able to measure and benchmark the behavior of your data, the behavior of your borrowers. And part of that goes into the challenge of finding growth and how you can lend to more customers, right? Part of that might be, as part of your decisioning logic, you might be eliminating or blocking underwriting or originating to lenders or borrowers, that bank with certain banks, or that carry debit cards or certain types of debit card instruments, right? Some of that might be fraud related. Some of that might be behavioral related, based on a demographic reach or a region. So as you mentioned, KPIs and the data and measuring that, and some of the obstacles that we encounter, make sure that you're collecting that data and you know how to decipher that. As you are underwriting, originating, collecting leads, inbounding loan applications, try to measure that and use the data that you have. But you also need to be able to make sure that you're collecting it and harvesting it properly, so that you can understand that information and try to understand it quickly, not wait a month or a quarter and then go back. So it's something you need to be looking at on a daily and weekly cycle, and understanding the behavior and applying the behavior to first payment defaults, to fraud, and applying that to the data that you're collecting. So
Yeah,
make sure that, whoever your LMS, your LOS provider really, and your payment processor, that they can harvest that data properly, they can provide the reporting that's needed, and you can break that down and really understand, what you're encountering, based on different lead sources or different loan products in different, regions, and understanding how that applies. So if I could address anything on that would be that. And then I think, finding customers, finding growth, it also comes down to, right, how can I really dial in my origination and decisioning methods and habits to reach a broader market, right? If you really understand the data and you look at that, that's when you can realize, untapped opportunity with volume that's already coming your way. And I think that's important. And that's really neat when we see lenders find that.
Yeah, definitely. So it's interesting. Oh, my slide's going back and forth. Hold on a second. James, so the consumers are really the reason why we're here, right? So they want options, of course. We all know that lenders need to know your customer, the KYCs, right? And that customer landscape might have changed in the last couple of years. Of course, there's the importance of flexibility, speed, security. That's really important. But how do you think the landscape of consumers' needs has changed especially with the new generations that are entering our marketplace?
Yeah, interesting, right? I think you had it labeled addressing the higher demands of next generation digital first customers. We can talk about this, but also I think the biggest and the quickest impact to the marketplace has also been the impact of COVID and our pandemic, and really catapulting this digital first customer as we really move towards this digital age. The pandemic has really forced everyone to become this, to better prepare themselves to provide and service their customers and consumers in a consumer not present environment, right? Think of all the storefront lenders and the brick and mortars that not only could they not lend, but they couldn't take payments, right? There was no one there to man the store to take payment in person. That quickly and immediately created the requirement for adoption to being able to take payments virtually and digitally in a card not present environment and in a cashless environment. And that goes hand in hand with creating a frictionless experience. But you mentioned a couple points here. Everybody's moving towards this digital age is creating this demand of commerce to be conducted instantly, right? Everything needs to be done in real time. It needs to be done online, digitally. Everybody's using their mobile phone. Everybody's online. Everybody's connected now. There's still that small market, but eventually you're going to see full 100% attrition of that market. States like New York that don't have these types of loan products that still cater to the demand and market of the money service businesses, check cashers, currency exchanges. I think that will continue to be there for a very long time. But in the world of fintech, as we move towards this digital age, everybody wants instant gratification, as you mentioned, and you can only do that and service that with real-time technology. So you have to now utilize real-time products. One of those products that we'll talk about is real-time funding. Identifying through real-time decisioning, and Accelitas has their Lift product that helps with that. But it's funding the loan, right? We have many online lenders that don't lend afternoons starting on Friday afternoons and throughout the weekend. And you can arguably say that's going to be your largest instant demand that is timely, where somebody has a financial emergency or a financial crisis and a need for access to credit during those times. And that's another point that we talked about. That's untapped, and there's where you can find growth. For those of you that said that's one of your biggest challenges, you can immediately identify, with the use of real-time technology and products for funding loans and dispersing loans, even at 4 a.m. on Sunday, because somebody spent all their money at the nightclub and they don't have money to get home. They could just go on their app, pull down money, and use tap and pay within the Uber or the taxi cab or whatever it is they need instantly. I think that's what this digital era of consumers are creating. And then in hand with that, you've got the real-time aspect of it. You need that for fraud prevention. You've got an increase. You've got clever outfits and rings out there that are performing fraud on a daily basis. Our validation tool provides for a high level of KYC, now coupled with the bank account verification product. But when it comes to identifying the consumer is the borrower and the borrower is the bank account holder and the instrument holder, and you do that in real time, you can essentially eliminate all of the fraud and prevent that fraud. And that's, I think that's important as a lender to have that put in place before you really, open up the spigot and turn up in finding new growth and finding access to new borrowers. And that's what it takes. So that's my feedback on this whole digital era of consumers.
And James, there's a related point there that you've got a whole group, excuse me, of Gen Z and Y consumers that are using debit cards, right? And they don't have the protection of the credit card system. And so stopping fraud is a pretty important thing when you're in that realm. And that's one of the things that we love about Loan Payment Pro is you get the ability to fund to a debit card, because it's an increasingly bigger portion of the consumers out there. Because of student loan debt and other things, they shy away from credit, right? And so they're kind of in that middle space where they're trying to get access to things that they want to buy, but they don't know how to build credit like maybe other generations have.
Yeah. I mean, and if you don't, I think if I can add one other point too, you need to be leveraging email, you need to be leveraging SMS, you need to be leveraging push alerts through your mobile application. If you're an online lender and you have an online platform and your product is a digital platform, you need to have a mobile app presence. And there's so much advantage to that, right? You can tie into so many other platforms, Greg, as you know, in the affiliate marketing space, where you can leverage and utilize third-party affiliate marketing data and perform push alerts, and you can expand to new marketplace, expand your market reach just through that alone. And having a mobile app is going to allow you to perform push alerts. You're going to be able to identify and measure that borrower's financial health and wellness, and immediately offer them access to, for example, a line of credit product offering that you might have.
Yep.
No, it's a good point. I mean, there's going to be a lot of takeaways, but I think one that's important is that utilize the whole network in our industry, from lead gen to analytic software companies to the black boxes, making sure your LMS is letting you innovate as fast as you want to, and that your payment processor, and that you're thinking of multiple, having that redundancy. I mean, the whole industry is there to support and help that lender achieve their success. So all of these components, help make that happen. So that's great. The next thing is, Greg, I wanted you to, as my slides dance around in front of me. Sorry about that. The previous slide, Greg, James explored the consumer's needs, wants, and have they changed and why they changed. But I think it's important, especially now, to talk about how the economy has impacted the consumer and how that means that the lender will then now pivot. Yeah,
and I think this is just kind of the bigger theme of change, that we're in this moment in history where there is a lot of change going on. Right. And so as a lender, you've got to stay right on top of that. So we kind of talked about what's happening in the economy with liquidity and, don't fight the Fed. That was a rule that we had at Seligman that we never, ever broke. When the Fed is pulling money out of the economy, stocks generally don't do well. And we've all seen that over the last 3 months. But the other thing that's really interesting about this, so I was fortunate enough to be exposed to a bunch of data coming out of UCLA's real estate team. If you look at 2021, it was one of the first years in history where every single major metropolitan market across the United States had an increase in real estate prices. And it's the pandemic. We all went virtual, and what happened is there were a bunch of people, California probably lost 1 million people, right, who moved out of the state into literally every other real estate market in the United States. right? They went where they wanted to go. They're all working virtually. They changed jobs. And the thing that's actually interesting about that for us, for the lenders, is think about their operating costs. That's a whole group of consumers that were given a bunch of liquidity by the government, and now they're living in a market with lower operating costs. And so while the economy is going to slow down a little bit, our consumers are actually, on a relative basis, probably better off long term because of their lowered operating costs. They're not commuting anywhere. There's less miles going on their cars. They're not buying a car anyway because none of us can buy a car because there are no cars to buy. And so if you kind of think about the cycle we're going into, it may be a little scary, but that underlying consumer may be a little more resilient than we've seen in other downturns. Like if you roll back to 2009 or 2010, something like that. So I just leave you with that little bright spot that may work out well for all of us.
So James, a happier topic, right? Can you share any of your predictions on how the current administration or how Congress is now shifting will affect our industry in respect to regulations and what we've seen is, you know, a promised emphasis on enforcement?
Yeah, so I think the CFPB, you know, and I think you mentioned it on a brighter topic. I don't know if I agree with that, but so the CFPB recently did last month a market snapshot. They did a report, consumer use of state payday loan and payday loan extended payment plans, and they broke that down by state. And I think that just is a small sign of, hey, we're going to perform due diligence here and understand the true effectiveness and impact and effect at the state level with some of these small dollar high interest loan products. And that's a sign that enforcement action and more action and activity is coming. We've already started to see that with Chopra in place. He's a really smart young guy that is the king of his castle, and it's a little scary at the same time. So I think with that said, you know, it's just the obvious, right? Every lender really needs to be buttoned up with compliance adherence. They need to have proper CMS in place. You look at who they're going after, and they've made some attempts in the payment side and the payment space as well. Some of them related to lending, which has been interesting with merchant cash advance, and recently with a specific lender called Brightspeed that was involved in lending and some fraudulent activity on the payment side. So we see that. From our position, Loan Payment Pro, we've understood from day one, even back in 2014-15 when we were seeing the proposed rules, and they even had the Kansas City field hearing. We went to it. We were there when Cordra was running CFPB, so that we can better understand their mindset and approach, because we wanted to build a payment platform that resolved that aspect of it for lenders from a payments standpoint. So now what's interesting is we've positioned ourselves well to really identify and have the technology as a foundation to make it scalable. And something that's interesting here is the payment provision, right? It will go into effect. The question is when. We all know that there's, I think, 285 or 289 days that we will have where it will go into effect. I think there was just a hearing yesterday or today that's taking place, so we'll know more on that. But I think lenders need to be understanding, and also vendors, other payment processors, other service providers need to really understand the payment provision for both the notification and communication rule of payments, and then understanding how to comply when a lender has experienced 2 consecutive failed payment transfer attempts due to insufficient funds. So our approach with the use of technology is to prevent that. How can we provide an endpoint or a function as a payment provider for a lender to identify if funds are available prior and at time of attempting payment, so that you don't receive 2 consecutive failed payment attempts or declined payments due to insufficient funds. The whole key now is to utilize bank account validation and verification, verification of the debit card instrument, really understanding the data and the components and the deliverables that your borrower is giving you, having the technology to properly validate and verify that. And that's going to help, right? We've got lenders that have been performing validations for all their payments for that current day. They'll do it in the early morning hours to do a clean sweep so that they're more efficient when they actually go to run the payment later that day, for example, on a Friday. So using real-time validation and verification is going to be key in making sure that you're complying with the new small dollar lending rule and the payment provision, but more so working with a payment processor that has technology that gives you the ability to identify if funds are available without performing a payment attempt. And Trish, as you know, we've worked hard to build that, and that's going to be key. So you got to know how to navigate the rule, and then you got to know how to be compliant with the rule. But most importantly, not let that rule negatively impact you. I think a lot of lenders, and more importantly, loan origination systems and loan management software platforms are not prepared. They're not ready for that yet. So they have to work with payment processors to integrate that functionality, again, if that processor has that functionality.
I have a question.
That's key.
Yeah, I have a question that just popped up. Let's see, great information and the technology is moving forward, but the states and the feds, CFPB, can be an impediment to implementing these technology. And then he wrote payment rule equals 286 days.
Yeah.
I think it was just, maybe rhetorical, but wanted your comment on that.
Yeah, again, make sure that you're leveraging technology. You get with your legal team and you get with multiple of them. We work with 3 or 4 different groups and different attorney groups that are well known in our space, and we work with them often. But I think a lender really just needs to be buttoned up. Look at it from the state level and look at it from the CFPB's federal level. You have to look at all your reg laws as well. So you have to understand what you're doing, how you're doing it, and make sure that legal signs off on it. Make sure your payment processor understands your business model and the process flow and the user experience. That's important, not just giving you like a credit card terminal or a virtual terminal to log into and say, have at it, good luck. I don't know anything about your product. You need to work with a processor that is exclusive and understands this type of model and the environment for that, the behavior between the borrower and the lender and the regulators. So,
and James, I think you also hit on it, is make sure your vendors have spent the time to find, the right kind of legal counsel. So both James and I have searched for the legal counsels that we use, and they're the best in the business, right? They're very expensive, but they're the best in the business. And so they guide us well, and they help us, see in front of these kinds of regulations. So I think that's super important, because you would think some big companies, they have great legal counsels, but sometimes that's not the case. So
you suggest a lender outright ask their vendor, like, do you have in-house counsel? Or if you have counsel, who are you using?
Right.
That's a question that they should ask, maybe. Yeah.
And when it comes to payments and lenders, and whoever made that comment, Trish, we've spoken with many of these attorney groups. So we'd love to make an introduction or a referral and can help there for sure.
Yeah. Okay. So Greg, protecting consumer data is not only crucial, but it's imperative, right? To sustain and hopefully thrive in our industry. So how can a lender protect consumer data while reducing fraud through the validation system and grow?
Well, and I think that's, again, you've got to really be proactive with your vendor and ask the really hard questions about how they are using the data, what data they bring in, how are they transporting the data, how are they storing the data, are they getting rid of data, do they hash it instead of keep it, right? There's a lot of nuances. You know, we're based here in California, like it or not. We started this whole thing with CCPA, which is a smaller version of GDPR, but there are now, as you can see on this map, there are many states that are now going after consumer protection, data privacy laws. You know, third-party cookies is a thing of the past now. You're going to see, first-party data coming out of big retailers being a more and more important thing if you're trying to target consumers for ads or leads. And I think this is not going away. This is going to keep going in the same direction. I think, those of you that are playing around with online banking credentials, you've got the same issue there. Did the consumer really give them permission to go into their account for the next 6 months to a year and take data every single month from their bank account to do whatever they're doing with it? It's a huge pit of quicksand, I believe. And there's one company in the industry that's well known that has already signed a settlement last summer that covered 100 million US consumers. And those documents are out there from the legal proceedings that you can find yourself. This is going to be a thing that just keeps going. So, we take data privacy very seriously. We, are very, very protective of what we do. We're SOC 2, Type 2 compliant. We've been in the SOC auditing world for like 8 years now. So you got to be careful with your vendors, because every one of your vendors is a potential data leak. And if you get a data breach, it's $200 a consumer to mitigate.
That's important that you said every vendor, because some lenders say, oh, well, the data is secure in our LMS, but they have to take every vendor from their LMS, from their lead gen all the way through.
Yeah. And we took a team at our company and we studied every single major data breach over the last 3 years. Every single one of them started with one employee that was compromised in some way. And so it's not necessarily, an outsider coming in. They're coming in through one of your employees. We spearfish our employees every single month of every single year, right? You've got to have
it starts with policy, right, Greg?
Policy.
I mean, training and policy and auditing those policies and continuing education and certification at the employee level from the ground up. And that is where it starts.
Yeah.
So real quick, looks like, Greg, I have a question. They're saying, Greg, please comment on the new FTC safeguard rule.
I am, believe it or not aware of the FTC safeguard rule. We'll have to follow up on that one.
Yeah, we'll follow up on that.
You got to work on your Google skills. I would have had that Googled already.
Well, we can
threw it out
connect you on that.
There's another question. Are either of you, Greg or James, seeing an increase in what your clients want you to have in cyber insurance coverage? Has that changed in the last couple of years?
And cyber insurance, the cyber insurance market has gotten very difficult to deal with. The premiums are doubling year over year because of all the data breaches. And so that's actually a big issue for our industry. Because again, the simple math for the lenders is the number of loans that you book times $200, right, is the remediation cost. And so you can imagine if you're a lender and you've got, somewhere between $500,000 to $1 million loans that you're funding, that's a big number in the hundreds of millions of dollars of exposure. And so obviously you're not going to get that much coverage. So the coverage asks are going up, But we've got this issue that there are just not enough insurance companies out there writing these policies. And so I think that's something the industry is going to struggle with because of all the data breaches. I think a lot of these insurance companies have taken pretty significant losses. So
Yeah.
we're going to see that as a struggle for the industry for the next couple of years until that settles down.
And cybersecurity insurance is not an issue just for lenders, it's for their vendors as well.
Vendors as well, right? We have those policies to protect our lenders who are our customers.
That's a great point. You know, we battle with that as well. Fortunately, we're wholly owned by a publicly traded company with that has got a close to $10 billion market cap. So we leverage their insurance policies, and those are very significant. But yeah, we've had a couple large lenders have us increase that. It was required as part of the vendor due diligence. But one other point, just to wrap up, and I know we need to move ahead, Trish.
Yeah.
You know, this is important. I want to share this for lenders and anybody who's participating in this space. When it comes to payments on the payment side, you know, a data breach of your customer's data is one thing. A data breach of your customer's data and their payment information is another. First and foremost, make sure that you as a lender are configured properly and integrated properly with your payment processor, whether it's to your website or a payment form or a back-end user driven portal. Make sure that you are out of scope from a PCI compliance, a PCI DSS compliance standpoint. You want to maintain that you are out of scope, meaning that you are not touching, or the card data or bank account instrument data is not hitting your server environment. It doesn't reside on your environment. You never want to store it. And first and foremost, secondly, you want to work with a payment processor that is PCI level 1. They are on the Visa Global Registry as a certified payment gateway partner, and they're properly encrypting, storing, and facilitating the card data and your borrower consumers' bank account information and instrument data properly. And that's key.
That's something a lender could ask their processor.
Oh, absolutely. The processor should be providing guidance as well as direction and automated certification and auditing for proper PCI compliance.
Okay. So we might have to move a little faster. Sorry, I was just so excited hearing you guys talk. So we've discussed the challenges that lenders are dealing with and identified some of the main causes. Now we really want to talk about, you know, action. You know, what are some ways to achieve success through some tools? And we'll get to those tools, but we want to stimulate success. So I want you guys to, you know, just real briefly hit on some of these bullets right here.
Yeah, Greg, if you don't mind, if I can take a crack at it. And Greg, these are your words. You mentioned this in one of our many partner calls. You know, taking care of the customer's needs. You know, handling their need immediately, deliver on time, and that goes hand in hand with funding them directly, immediately, wherever they are. Being able to perform decisioning and underwriting effectively and efficiently, and doing it in real time or as close to as real time as possible. You know, you can't compete, let alone satisfy the needs of your borrowers and the demand for loan products if your verification procedures take, you know, more than 4 hours. There's still some lenders that will take in an application on a Monday and they're not approving and funding the loan till Tuesday, which means with archaic ACH crediting methods, the borrower's not receiving their money till Wednesday. And at that point, and this is a key point to know, think about the behavior. Think about that subconscious element of your borrower. How likely are they to pay you back when they needed that money on Monday, but you funded them on Wednesday? Compared to they needed the money on Monday, you funded them on Monday, and they resolved their financial crisis and their financial emergency when they needed it, right? Automatically, subconsciously, the data says that you have a higher likelihood and probability of receiving payment. So it's handling it in real time, performing it in a way that meets the demand of the borrower and the consumer, doing
Yeah.
it in a frictionless environment. That's, to me, that's the number one key action that's needed.
Yep. And the only thing I'd add there is think about the other thing that, you know, our lenders struggle with is conversion. And so instant funding probably increases your conversion level as well, because, you know, if they don't take the loan, you spent a bunch of money to screen something that, you know, went into the wind.
Right. So
Yeah, absolutely.
earlier, you both gave us kind of quick overviews of Accelitas and Loan Payment Pro. But the real reason we're having the webinar is to talk about the partnership. The strengths of both companies make both even stronger, right? So this partnership, essentially, what does the partnership mean to lenders, and how is this going to benefit, you know, our industry, the lenders?
Well, and I think from that standpoint, I think you just hit on it, James, is that I think you've got to make decisions quickly, right? So, you know, you've got to, when I booked my ticket for Lend It, Alaska offered me the ability to pay the whole thing or pay it over 6 months, right? You know, Alaska's even doing it, right? And so to the point earlier of people are being offered credit out there in the world where they are, you have to be able to do that inside of the session where I'm booking that ticket, right? So if you aren't doing it instantly, right, you're going to get left behind in this world where that consumer is going to have other choices. From the partnerships perspective, I think AI Validate, which is our bank account validation product, is the one that I think, James, you can talk to it in your, you know, your products. How does it help you do things faster and more safely for that consumer?
Yeah, exactly. So there's a few points to talk about here, but really breaking it down, you know, what does this partnership mean for lenders? What is the greater enhanced benefit and advantage that both Accelitas and Loan Payment Pro can bring to lenders operationally, right? And there's a few things here, you know, so whether you're trying to perform fraud prevention and you're trying to mitigate that risk, whether it's a compliance adherence or a compliance requirement, whether it's you're trying to create one less moving part and create more of a frictionless environment and experience, that's what this partnership provides. And there is a requirement to make to perform integration of account verification and validation, an ACH processor over here, a debit card processor over here, bringing it all into your loan management software environment. And the greatest benefit, I think, to this partnership is what you offer with the bank account validation product, now seamlessly integrated into Loan Payment Pro's API. It's now one stop, and it's an endpoint that is made available into the loan management system that complements the payment instrument and the payment information as it's being captured and really in a two-step, one handshake procedure right into the payment platform, of which Loan Payment Pro is fully integrated into the loan management software. So it's bringing all that together, and it's like 10 less steps a lender has to go through now to take advantage of this. And that's why when we chose which account validation and bank account verification company to work with, it needed to be the right one, because there's a lot of heavy lifting that we've already performed that a lender doesn't have to worry about. So it's a flip of a switch, and I think that's the greatest advantage.
Okay. That brings me to
and it looks like we only have a few minutes here, but we might go over a little bit for any of those that have some time, which I'm okay with. Greg, I don't know if you have a hot date, lunch date like you always do. You brush me off the phone real quick usually on our calls.
I do not have a hot date, so I'm all yours.
Yeah, so
I am your date.
The next slides are, you know, really talking about the difference between the traditional SIP systems and then the, you know, some of the benefits of achieving, you know, acquiring alternative data. So I don't know if we want to spend a lot of time on this slide, Greg, or if you want to jump into the next slide.
No, I can just make one big point here, which is we have a very broad set of data that we access that literally gives us a view into most of the bank accounts in the United States. And so again, the only point here is all you need is a bank account and a routing number, and that's it. And you get a response back in 200 milliseconds or less. So it's pretty. We've tried to make it as simple as possible and as effective as possible. And the one last thing I'll say here, because James, you made this point earlier, as we go into this crazy environment, one of the things you want to do is you want to have real-time information. And one of the beads you can get on as to whether that consumer is out in the world transacting is the type of data that we get access to. So our data is transactional data. It's sourced from a giant set of merchants that are out there in the world and all these consumers. And the consumers are spending, and believe me, this has been very important over the last 2 years as a somewhat proxy for employment. That consumer is still out there spending at the same velocity that they were spending before, right? You have a different view of them as opposed to traditional trade line credit data. So this is a super important point that you got a bunch of knives in your drawer. Pick the right knife for the thing you're trying to cut, right?
Right.
And this is a different kind of knife than maybe the traditional credit knife that you were using before.
And it goes back to my original point, right? Regarding KPIs, it's measuring the data that you wouldn't think to measure and to look at. And by the way, you should partner with a payment processing company. They could probably share a lot of really neat data with you. So
yeah. So James, real quick, you know, this discussion of the omni-channel, it really is about the whole payments ecosystem, right? And how does it benefit a consumer to have the same look no matter what payment option that they, you know, is chosen, you know?
Yeah. So there's two things here, right? You've got from a payment environment and a payment platform with whomever vendor or vendors you're using. And at Loan Payment Pro, we're the first to support and we advocate for especially larger lenders, larger volume lenders that might have, you know, certain spotlights shined on them, to work with multiple processors, have redundancy in place, right? It's okay to favor one processor and have a secondary processor in place just for redundancy.
Yeah.
Right? We've all learned that that's how we need to approach this from the days of Operation Choke Point. So having a payment solution that's going to provide you all the tools to seamlessly create frictionless payment acceptance is number one. So there's a challenge here, not just by the lender. There's a challenge here for the borrower, right? You as a lender have to operationally consume the proper API integration, whether it's into your proprietary loan management software, your point of sale software, your loan origination software, and we work with servicing companies and lenders and different LMSs out there. It's making sure all of the tools are integrated properly. You've got all the payment acceptance methods like ACH and debit card, all the card brands like Visa, MasterCard, and Discover, and having all your payment product solutions integrated through one solution into that same environment, keeping it cohesively branded across the spectrum based on where your user is going to see that, and they see the same theme and brand, and that's really important. But most importantly, it's delivering that to your borrower, making sure that you can work with a payment processor, you understand that, you can operate efficiently, then you can turn around and provide that to the end user. I think that's key.
And this slide, you kind of outlined, you know, the whole flow of the process.
Yeah, and it's, you know, in the world of payments, you know, Greg and his team is going to argue, well, it's, you know, it's crediting and decisioning and data is going to be most critical.
Don't fight it.
Lead generators are going to say, well, we're creating the borrower in the first place, so that's most critical. And at Loan Payment Pro, we say, well, the most critical thing is your business means nothing if you can't bring that money back in, right? You're in the business as a lender to bring in money. That, at the end of the day, I think that's the biggest argument, and you need to bring it in efficiently. And the world and the environment and ecosystem of payments is very complex. There's a lot of moving parts to it. and we eliminate all of that. You don't need to worry about that, but we do like to share and educate the inner workings of how that is. And there's a lot of different types of payment processors out there. And this is a key takeaway, and this is where I'll leave it. You've got resellers, you've got brokers, you've got ISOs. And then you have true payment processors that own the technology, they own the bank account relationship with that sponsor bank or that ODFI settlement bank, and they are the ones that own the registration with Visa and MasterCard. You know, that is in turn really that wholesale raw processor, and you need to find one that works directly with the market, and that's going to provide you the most efficient, cost efficient, and the most payment effectiveness in working with a payment processor. So there's a lot here. We work with different types of loan products, and you have to understand them all. And I think that there's a different use case for every one of them and how you utilize both our technologies to create the most efficient loan and account.
Yeah. Yeah, so I know we went over, but I don't know if anyone has any last minute questions or comments or jokes that you want to throw at us. There were a couple that came through explaining the FTC safeguard rule, so I'll pass that on to Greg and Jay so we all know. But other than that, I really just wanted to thank Greg.
I have a question.
Yeah, go ahead.
Who's winning the Stanley Cup? Greg.
Ooh, that's a tough one.
Well, what does Greg think?
It could be a Florida team, and there are two that are vying for it.
Nice. For those that don't know, Greg's a big hockey guy.
Yeah. So yeah, I wanted to thank both Greg and James for their time today, their expertise, their dedication to the industry. I think this is, I know went a little over, but I've appreciated it. I know everyone has on the call. And also the Excelitas Loan Payment Pro partnership. It helps, it's going to help lenders stay compliant, mitigate risk, reduce fraud, and seamlessly collect and distribute funds faster. I mean, to me, I'm like, sign me up, right? So what I wanted to share the last slide, because both companies are going to be at Lendit. So the booth 544 for Excelitas, 542, I believe, for Loan Payment Pro. If you have any questions or anything that you email, call James and Greg. Don't get mad that I'm telling them to do that.
Call Greg.
Yeah. Call Greg anytime, day or night.
I'm with him.
Yeah. I'm excited. I'm looking forward to Lendit with you, Greg, and the team. That'll be a lot of fun. You know, I think for me, the most fun I have is interacting with lenders, identifying their challenges, and helping them overcome that. That to me is the most rewarding thing, right? And you can't ever give up, and you can't ever lose passion in sight of what we've built, you know, together and respectively, individually, and why, you know. And sometimes you build it to a point where you realize, my gosh, this, not just a lender, but the industries, you know, relies on this to function. And that's a humbling experience. But you know, being at Lendit is great. I think everybody gets to collaborate there. There's all different types and shapes and sizes of fintech players. So we're excited to see you guys, and please, anybody stop by the booth and see us. And Trish, I think you have this recorded as well, so you can send this out and share it with everybody, right?
Yeah, everybody that attended, and actually everybody that actually registered that maybe they couldn't attend will get a copy. So
awesome.
And we will see you in New York in a couple of weeks.
Yeah.
Yes, so I will see you both there.
Yeah, definitely.
And you know what, Greg, you're gonna learn. Trish is she's much more popular than both you and I combined.
Stop it.
I'm not confused
cool
about that.
I don't have a vest. Look at that Excelitas vest. If I had that, I would be so excited. All right, guys. Thanks so much.
Thanks, everyone, for joining us.
Yeah, have a great day. Thanks so much.
Thank you. Have a good day.
Thank you.